All right, hello traders. Today is Wednesday, October 21st. Welcome to this live intraday strategy webinar on SB Trade Desk. Good to be with you guys this morning. Chris, good morning to you. Permendra, Mario, Mark, Merdad, always great to see your comments here in the morning. Good to see you. So, it's been a little bit of a quiet session here. I didn't really squeeze off too many last night. Obviously, we have the BOC on tap later today at 10 a.m. Eastern. It's going to be the major highlight for these CAD crosses that we've been following. And then obviously the fireworks start tomorrow with the ECB interest rate decision. And then we do get more CAD data this week. Tomorrow you get retail sales data. And then the following day, which may be even bigger than today for the loonie crosses, will be the consumer price index, CPI, or inflation figures out of Canada as well. So you want to keep expectations trimmed on some of these CAD crosses, but certainly the setups are there and they're looking pretty good here. So we'll go over yesterday's update on dollar CAD, Kiwi Dollar, and Kiwi CAD. We'll go over some of the Aussie crosses as well. We'll take a quick gander back at the euro. The euros have sort of been in this holding pattern right ahead of the ECB. So we want to stay nimble on those pairs as well, but we're still looking at the euro Aus. Euro CAD is looking still like it's holding its own. So we'll see if we can get a little bit more clarity on those setups today as well. As always, feel free to throw any questions, trade setups throughout the session, guys. You've been asking some great questions here over the last couple of days. Keep them coming. I'm sure there's someone else who will have a similar question, so don't hold back. All right, let's jump right in, shall we? Quick look at the relative performance so far on the broader equity board. You had a mixed session in Asia Pac. The ASX 200 Aussie markets did all right, pretty much just above water. Nikkei also not really anything special, nice 2% gain. Still had a little bit of a spillover effect here in Shanghai with a decline of 3% overnight. Europe's doing pretty well. So if we look at current markets in Europe, higher across the board. U.S. equity futures ahead of the open, also slightly higher here, not by much. About 62 points on the Dow Jones, about 8.5 points on the S&P. Relative performance for the dollar looks like this. It's pretty much strong against most of its counterparts. Euro still pretty much unevened on the session. So is sterling. By the way, sterling's just putting in a very nice opening range here. With the Aussie coming off 0.52%, Kiwi off 0.39%. That broke support finally on the Kiwi, so we'll talk about that in a moment as well. And the loonie down 0.25% ahead of the Bank of Canada. What are we looking through with Canada coming up? I'm not really one to really want to delve in too deep into this, guys, but we'll be looking for any concerns about the inflation picture. Remember, Canada is actually coming out of a recession, a technical recession, 2 quarterly contractions. And if it's going to be a little bit more of an upbeat print, you'd expect that you'd see a little bit more of a loonie rally, dollar CAD lower. So we'll see how that works out. Again, remember with these releases, a lot of time the initial knee-jerk reaction to the market is not going to be the right direction. So stay nimble here as we get into this release in just under 2 hours. Craig says, good morning, Mike. Interested in your thoughts about the euro versus the Aussie, Kiwi, and CAD today. I took a long trigger break at 6:30 in Euro Key. Well, nothing's more pressing than a trade that you're in, Craig. So I'm going to segue right into that for you, man. For Euro Key, about 6:30 this morning, huh? Okay, this is what I'll tell you about Euro Key. I was looking about this yesterday, and I was actually considering putting this on the report. I like the long side, Craig. I don't necessarily like where you're long from. I would have been a little bit more pressed to get in on a long position closer down to a pullback in 67.90, basically the 68 handle. If this formation is a legit break, and I'm leaning towards yes, you've had a nice median line formation here, which seemed to define price action extremely well. A sliding parallel of that similar slope, also connecting the last lows here. Missing it on this is a bullish development. I think we talked about this here in the webinar yesterday. So you'd expect to see this thing constructive above essentially 67.90, 67.70. So I'm not sure where your stop is. I wouldn't be too surprised if it pulled back. I would be looking to buy though. Objectively, this is just a simple break of the weekly opening range. So while above 67.70, you'd look to maintain a constructive bias. The momentum signature looks pretty good. Came from oversold conditions, late last week. Resistance at 60, hold at 40 on the last 2 attempts, and here's the 60 break. Shifts the momentum profile to a little bit more of a constructive approach. Craig, does that help? I think you can get a pullback from here, man. I think as long as you hold 67.80, 67.90, that you're all right. On a topside stretch, ahead of the larger retracement you're looking at there, I would want to just take a quick peek at what this looks like. That'd give you 70.80 on the upside. And that would be probably the median line formation I'd be working with on the upslope. Again, highlighting a bullish invalidation level right there at 67.70. Beautiful setup, actually. Not bad. So keep an eye on that one. But looks pretty good. Looks pretty good. Expect some pullback from here, Craig, but I would stay constructive above that region. Hope that helps, man. As always, guys, if you're in a trade and you're in a, you kind of just want someone's take on it, that's what we're here for. I mean, I'll definitely be willing to put the setups on pause here to answer your questions, so do feel free to throw those out. Craig says, in at 68.57, stop at 68.16. Yeah, I mean, I'm not crazy about the stop. So, Craig, on a trade like that, just again, I don't want to necessarily scare you out of the position, but on a trade like that where I get into the position, I don't necessarily see the rebound I'm looking for right off the bat. I'll put the stop at break even, and if we breaks lower, it's just giving you a better entry, right? Why sit there and watch your position move against you when that pullback can simply get me a better entry lower down? So I tend to be a little bit more nimble here. You don't have any major key event risk from the euro or the Kiwi until tomorrow. So play as you see fit, but watch that region of interest to the downside, all right? Let's just do one more drill here and take a look at euro key on the 5-minute. Bear with me one moment, guys. Okay. Okay. Okay, 60. Okay. Yeah. So momentum on this, just really near term, Craig, has gone completely lateral from that high that you made a couple hours ago. You can see since the New York Open, it's been 60-40, 60-40. And this is typically when the market's a little bit more of a lateral move, flat market, ranging market, whatever you want to call it. It does set up for a pretty decent New York opening range. And if it breaks above those highs at 68.75, it actually bodes pretty well. But it's a pretty flat momentum signature on the near term. So hope that adds some more color from where you are in this trade. I like the idea. All right, so Craig says, thanks, Mike. You're more than welcome, sir. Always willing to take a look at an opportunity that might be pointing at us. Okay, let's jump right in. Here is the CAD crosses. BOC's on tap. We'll be looking to see if they have any concerns with regards to the inflation picture. Remember, again, like I said, they're coming out of a technical recession, so we'll want to see them a little bit more upbeat for this to give a little bit more kick to the upside for the CAD, dollar CAD lower. Here's what dollar CAD looked like last night. And if you guys remember in the webinar yesterday, we were right at resistance and it broke right off. So here's where we were trading. We saw that little spill to the downside. We came right back up and pulled off, and we were opening the webinar right above this region right here, right after coming off of that major key, or it's not really a major key, but it's the median line off the lows just from last week. This is just using last week's price action. And the pullback certainly went to 29.70 and then subsequent targets at 29.38. Momentum moved to the upside, a hold above 40 here. The rally still is at risk for coming into a resistance region here at 130.70. 130.70 is just a basic 38.2, but more importantly, it's going to be that median line off the highs. And this is sort of a structure that we were looking at yesterday. So ahead of the BOC, you can envision a scenario where you see a mean rip, okay, to the upside for dollar CAD. Maybe the CAD sells off. This is going to be an entry, possible entry point for the shorts. You got a really good stop. On a move like this, I would have a pretty tight stop. If we do get into that region, a break above this risk a run all the way into 31.38, 31.43. Is a 50% retracement of the drop, but that magenta line also represents the September open for last month and a decent pivot in price. So the levels are pretty clear. We haven't necessarily invalidated the outlook for a move lower here. Near term, the immediate risk is for a rally into that 130.70 region. We'll be looking to see if that materializes into the BOC. So not much to do here. The only trade that was actually a decent one off this last night was a break of the opening ranges. Here's what it looked like. Here's what it looked like last night. So you had the Sydney Tokyo opening range essentially set between 29.70 and 29.90. So you had a 20 pip opening range for all of Sydney. The first few hours in the majority of Tokyo trade before breaking here just ahead of the European Open shifts the bias to the upside against the lows, looking for that late session high, and it's exactly what you got into the Tokyo Open. London hasn't really given us a decent opening range. The U.S. opening range is already pretty widely stretched, so we're going to keep looking higher, seeing if we can get a short trigger as close as we can get to that 130.70 region. Now, if the data comes out, guys, or the BOC comes out excessively, excessively dovish, or with a more bleaker outlook for the economic or monetary policy moving forward from the BOC, then you'd look for a break and a push through 130.70 for pullbacks to get long. If we really plow through this section, not really looking to play the short side anymore. That's going to be the near-term bearish invalidation level. Any questions on the dollar CAD levels ahead of today's event risk? There's a couple of different ways you can play this as far as the CAD trade. One of them is by way of dollar CAD, probably my least favorite, but it's definitely on the menu. All right. Next up on tap from yesterday was the Kiwi Dollar. And then this one was a trade that we highlighted on the radar charts earlier in the week. Basically, we were looking for a simple weekly opening range break. The opening range low for the week came in at 67.81. You saw a quick break of that yesterday, and we sat right at support into the open of Asia. Another very, very clear trigger. You had a very simple trigger in momentum with that trend line support right off the lows. Price action was at channel support at 236. Nice confluence region here with a swing high at 67.37, and you'd simply look for these opening range breaks. Remember, opening range breaks, when they happen, when they're taking shape above support or right into a resistance levels, those are the best plays. Why? Because if the opening range break happens to the downside, well, you're already at support, so that gives you further conviction of playing that short side exposure. If the opening range breaks to the upside, just as good. I have a perfect place to put my stop. I know this is support here. It's also the opening range low, and that gives me even more um, conviction on taking the rebound. Does that make sense, guys? These are going to be your favorite setups all the time. An opening range that's up against resistance or an opening range that's up against support. Christopher says, that's what I was waiting to hear. I don't see that level really stopping in advance on dollar CAD, but I always pay attention to your levels. Chris, you're talking about this region here, 3070. I mean, look, puts dollar CAD in equal legs move up to 131.30 area. So 131, excuse me, 131.30, that whole region is pretty big. I agree with you. But this formation, while we don't have super conviction on it just yet, because we haven't gotten too many rebounds, it did catch the low. So I'm paying attention to that. You know, I don't really have much right there at 28.30 that would have caught that price action. I mean, maybe the lows here from back in July, but you know, even that got overshot. At the end of the day, it's just about putting yourself in a better situation and prepare for the move, right, Chris? I don't know if resistance is going to hold or not. No one does. But it's important to note that it's there so that if we do surpass it, your next focus just shifts right up to the next target at 31.38. 31.30 is what you're looking at. But I'm going to put this as a caveat, and I've seen this happen a lot of times. If the data knee-jerk reaction is to the wrong direction, typically those tags and those quick spikes will spike right into those regions and then pull right back. So, Chris, if the data is going to be bearish dollar CAD in general, if it's going to be CAD strength on a move that fades the market, a quick rally, that's where I'd be looking for entry. Does that make sense? He says, I agree with you, but maybe a better setup is a move down in dollar CAD off new highs, the higher, better short then. I agree with you. I completely agree with you. And the whole point of this, Chris, is that we're trying to find a rally to sell, right? We've been saying that since the start of the week. Here was one yesterday that was beautiful, or earlier in the week. This was on Monday night. We talked about that in yesterday's webinar. And then if we get another push into that 3070, even better. The only concern I have with 3130 is that it's right mid-range here. And if we pivot through this region, you're risking, I think, even a higher move into like 32 is where I'd be looking. But these are the first two levels of major interest of where we'd be looking for possible short exposure. All right. So some food for thought there. Hope that helps, Mr. Hudson. But back to the Kiwi. Here's what Kiwi looks like now. All right, so we had, that trigger that we were looking at yesterday was a perfect break on the 30-minute, 5-minute offer just to clear his trigger, and the opening range was really the play here for Kiwi. I mean, that was probably the most compelling move that you saw. So here's the Sydney Open. Tokyo opens up. You test the lows. Even if you took this trigger, which I got faked out on, I actually took the trigger. It doesn't matter because if you had your stop against the highs, it didn't even play out. It didn't even go for a test of it, and you would have inevitably gotten your 24 pips out of it. So long story short, keep that in mind. These opening ranges into Sydney, Tokyo, as I've been saying over the last couple of weeks, have sort of been the sweet spot for a lot of these setups. And especially when the opening range low is right at support. I mean, those are my favorite plays. So all we've done is a simple pull into the 6707, 6705 target. We've made a rally off that region. Price came right into former support. Momentum on the 5-minute chart failing at 60. Okay, so still looking lower. Break below 6707. You're looking for a confluence support region down lower at the 764. Excuse me. It takes you down into like 6683. That's going to be a pretty big level. I'll just bring your attention to this ML formation that dates back to the lows from September. We broke through the highs here in early October, and twice we've tested former upper median line parallel as support. Rebound, test as support. Rebound as support. Or on a breakdown, much steeper correction to the downside. So this is sort of the pivot and the major key level here for Kiwi in the immediate term. So once again, near-term support 67.07 backed by 66.83, and a break below this region would suggest a much larger decline is in play. You'd be looking for a target lower down right around 65.65. All right, the invalidation level for the short side, the immediate short side is invalidated with a break above 67.40. The broader focus shifts right back to the long with a break above 68.19, and that's just the initial weekly opening range highs. Any questions on the Kiwi? Chris says, got you, agreed. All right, cheers, Chris. Any questions here on the Kiwi? Relative positioning here is very, very important. There's no Kiwi data on tap. You'll be looking for the dollar to drive this pair mostly. Broader risk sentiment as well. Again, immediate buy stays bearish sub 67.40, excuse me. Key support near term 66.83. And that is the Kiwi Dollar. Okay. I was just seeing if there's any triggers right now that we can get into on Kiwi. Nothing too compelling. Okay. Moving right along. Kiwi CAD was the last setup that was highlighted in yesterday's intraday update. Another one, I actually highlighted this setup on Daily FX as well yesterday. Little bit of an adjustment to the levels that we made on that report. But here's, well, let me start off with the daily. You know, the major thing that kind of popped in our head yesterday when we saw this was two things. A, an outside reversal day. Okay. And B, that outside reversal came off of a major resistance. Former support turned resistance, in fact. Here's what Kiwi CAD looks like on the daily. So if we zoom this out to go all the way back to the 2011 low that you made in early March, connect that to the 2013 lows that you made in the pair, you saw a break of that earlier this year, back in June. We came back and tested that same exact pivot line from 2011 as resistance in August. This time around, not only did we come into that, you had the 200-day moving average, which is literally 2 pips off the high when this thing hit, and an outside key reversal at that resistance. That's pretty bearish. Is that in and of itself going to make me look lower on a scalping perspective? Not necessarily, but it certainly risks a much more significant pullback if we do push below 87. Also remember, it's just a basic trendline support off that low, but it's also the median line formation of the advance. So a break below this would really solidify a much steeper correction in the pair. At the end of the day, momentum also showing us a trigger, taking us off the long side of the trade. Here's what the scalp looked like last night. So with what we were talking about with the Kiwi, what we were talking about with the CAD, sort of this setup right here is a good way to play both of those, especially if you get a strong reaction today. But here's what it looked like last night on the intraday, and here's what we're looking at now. Okay, we were holding just below 87.74, which was near-term resistance. You can see it here in magenta. Again, here a very clear and definitive Asia Pac opening range broke to the downside. And that move coming into that 87.30 target that we noted here last night. Okay, now it overshot it by a little, and the only addition that we've made to that setup is this sliding parallel. So if you take a a slider of the same slope that we were working with on that pitchfork, and just connect it to the lows that you made here earlier this week on Monday. You can see that catching the lows pretty nicely. Okay, immediate buy stays weighted to the downside below this median line. If you break here in US trade today, you do risk a rally back towards 88.60. That's not the preferred scenario. Preferred scenario is for us to stay bearish below 87.74, and the major area of support we're still kind of looking for is that 86.75 region. Just a lower median line parallel for the current operative structure, and a basic 38.2 off the lows from that late September rally. So Kiwi CAD, another one that seems to be playing pretty well. Kiwi moving to the downside. If dollar CAD breaks down, that's CAD strength. You can really see this start to pick up if we break this support. So it's one of those trades where it's really tempting a very important break. And with, Kiwi CAD had the biggest range yesterday, guys, because Kiwi was, one of the weakest and CAD was one of the strongest. So on that move, if you see, really wicked reaction today where the CAD kind of loses a lot of strength, then all of a sudden traders fade it, this would be a beautiful position I would love to get involved in. Nice ATR, not too wide, not too tight. You're looking at about 27 pips, so anywhere between 26, 29, 30 pips per scalp should suffice here on Kiwi CAD. But a very interesting pair I'll be watching closely as we head into the BOC. Any questions on Kiwi CAD before we move off? The only thing I want to also just say, guys, is watch that 87. On the daily chart, I have it as 87.12. I'd rather have my targets on the inside, but watch that 87 region, especially now. That's the basic trendline support off that September low, but it's also the slider. So it comes in just ahead, maybe right around that, there it is, 87.01. Right at the 87 handle, right before that 38.2. Keep your eye on that. And that is Kiwi CAD, my friend. So those are the setups from yesterday. I do want to touch base real quick on Aussie Dollar, and then I want to jump into as many pairs as you guys want. I do see some questions coming across, so keep those questions coming. Any specific pairs you want to look at, I'd be more than happy to take a quick look. Questions on strategy. Also, I'll be more than happy to address any of those. Oops. Sorry about that. Okay, here's what Aussie Dollar looks like. So a few days ago, there were no radar charts on tap last night. There's nothing really new that I'm looking at beyond these setups. But here's what the Aussie dollar looked like earlier in the week. And we were just talking about a very nice and clean opening range, just above support at 72.48, 72.41. It's a basic 618 extension off the high and the weekly opening range low. Here's what it looks like now. And similar to the Kiwi, not quite as clean, but I think that the opening range for the week was more definitive here, is you set up a very clean opening range, like I said, 72.40 into 73, and we were looking for a break of this. Now, it just so happens that on this specific trade, ahead of the opening range break, you had a pretty compelling trigger that broke before you even made a break lower. This is what I was looking at. And then here was the very, very tight Asia Pac opening range. Very similar setup. Here's what Aussie looks like on the 5-minute from last night. Okay, when you get an opening range that's sort of a drifter like this, you still have to respect and wait till the market makes a high, pulls back, and tests it. So on this stretch, in the first couple of hours of Sydney, first couple of hours of Tokyo, you really didn't have any definitive move on the opening range being in play. Once you get a high, you pull back, you test that high, and it holds. Now I'm looking for a break of the opening range low. That came in right here. 72.55, stop against 72.76. You're looking for about 22 pips, pushes it to the max, but here's the drop taking you right through support, looking still a little bit lower down towards that 72.02 level, which represents the 236 retracement from the decline off the highs that you made in May. So here's that level that we highlighted last week, confluence finally coming into focus here. So this is going to be a big support for the Aussie. If we break below this, I'm really inclined not to mess with this thing on the north side anymore. You can see a drop right into 70 at that point, and that's going to give you a 200 pip move. So I'm really looking at this 71, 77, 72 level with great interest for the Aussie. And like I said, if it breaks lower, guys, you're likely to see a much steeper correction. I don't really have much on tap. So that's sort of the game plan. And Christopher says exactly. That's why I'm cautious about dollar CAD. I hear you, but you got to understand one thing, Chris. The dollar CAD pullback has been nothing in comparison, or the dollar. Let me reverse that. Dollar CAD, in my opinion, was way more stretched out than Aussie is. This has been in a pretty steady downtrend. You haven't really gotten the crazy stretches that you got in dollar CAD. Right? And while this thing could whipsaw to the upside, I think there's so much people trying to call the low here to get back on the broader uptrend that if this thing reverses real quick, they'll clear out those shorts pretty quickly. Pretty quickly. But it's all up to the BOC. Let's see what these guys got for us here later today. Any questions on the Aussie before we move on? 71.78, 71.70, let's call it. This is the region of which I'm looking for a little bit more meaningful support. If that gives out, we'll be looking for a little bit more of a substantiated pullback here. Wouldn't be outside the realm possibility, Chris. Also, look at the dollar index. So here's what the dollar index looked like, and this still has some room to the upside. It is working on its 5th consecutive day of advances. Momentum coming off of 40 does suggest that we do have a little bit more room to the upside here. Whether that's going to be reflected necessarily in the CAD, Christopher, is my only problem with that. That's the problem with, he says, I see, famous CAD, dollar CAD head fake. Yeah, that's my problem with trading these interest rate decisions. I'd much rather be in a position trading NFPs, employment numbers, CPI numbers. With this stuff, it's a lot of times the devil's in the details. It's the rhetoric that comes out alongside it. No one's expecting an interest rate change or even a change to monetary policy. We're all looking to see what rhetoric comes out, especially on the back of interest rate expectations here in the United States really falling much more dramatically. People are finally starting to price out that we're not going to see an interest rate hike this year. And if you guys remember, that's something we've been saying here on SB for nearly 5 months at this point. It's just really, really, really hard to see the Fed being able to justify a hike right now in this economic environment. So looking at the dollar index, you wouldn't be surprised to see it pop into 11,965. That's the 100-day moving average. Former trendline support off the lows. Current operative upper median line parallel off the highs. All right, so that is Aussie dollar in the books. Let's take a quick look at the euro and the euro Aussie, and then we'll jump into your questions and wrap things up. Here's what the euro looks like. We are a couple of days ahead of the ECB interest rate decision. Lots of speculation that we're going to get some sort of additional easing measures from the ECB. My man David Song was doing an interview with Bloomberg earlier today, and they were asking him, volatility has been kind of low over the last couple of days in FX. Do you expect that everyone's waiting for the ECB? I wouldn't necessarily everyone is waiting for the ECB. They kind of just want to clear that out. I don't think we're going to get anything new. My humble opinion. Again, we're not here to dictate policy. We're here to trade it. And at the end of the day, the same support that we highlighted on Sunday night is the only thing we're looking at, and that's essentially that 113.17 region. We're talking about the opening range high for the month, and we're talking about the lower median line parallel for the ascent off of the September lows. That's it. You know what I mean? I don't really want to discuss it and sit here and try to say, well, they could do this, they could do this. At the end of the day, if it breaks below support, you look for a much more meaningful pullback down towards 111.75, which is the monthly open, but it's also the 100-day moving average and former trendline resistance turn support. So the levels are there. If we get a topside break to the weekly opening range, which is still beautifully held below this 38.2, well, that's pretty simple too. We'd be looking for a rally back towards 114, 114.20. I think that leaves the door open for a push right back into the highs personally. But first things first, we got to get through this weekly opening range, which is set just above support. Again, the ideal scenario for a weekly opening range break at support to break lower really gives you the conviction for the downside bias. Does that make sense, guys? So the euro levels haven't really changed from what we were looking at in the webinar here yesterday rather. Again, it's too soon to tell whether this pitch is actually in play, but we'll leave it for now. The broader one that we were looking at in the daily chart is really the focused formation we're in. Weekly opening range high 1376, excuse me. Weekly opening range low right at the October opening range high, and that's 1317. So look for a break of this range as we get into the ECB tomorrow. If we don't want to trade this versus the dollar, the Euro Aussie is also one that I've been focused on. I think someone here asked this in the room earlier today. Euro Aussie also looks pretty primed. In fact, I think if we get a Euro rally tomorrow, this is probably the one that you'll get a little bit more juice on. Here's what the Euro Aus looks like on the intraday. If this is a break, and if you guys recall, this was on the radar chart earlier in the week, if this is a break of the weekly opening range, which I'm compelled to think it is, we came back, tested it as support, it held, you should be looking for a rally back up towards 58, 68, 59 is really the major region we'd be looking for. Again, a median line structure here off the lows caught all of this week's pullbacks, and that gives you sort of an objective target here and here, right around that 59 level. The weekly open comes in at 156.45. Sorry, guys, I'm just going on the fly here. 156.45. Okay, this is the weekly open. And so with that, we'll put our near-term bullish invalidation level right around here. Don't need that no more. So essentially, you'd be looking for a break back below the median line here. As long as it stays above it, you'd want to maintain that constructive outlook. But it looks like last night's rally really did make a break through the weekly opening range high. Here's Euro Aus from earlier in the week. So we were in this massive opening range for the week. Here's that pop above 57. Went right into that first target at 57.15, pulled right back to test the opening range high. So as long as we're within this slope, we'll continue to favor the top side. Subsequent targets, you're basically, like I said, looking at 58.20. But that 59.11 region is really, it's really big. 59.17, excuse me. This region is really huge. Does that help on Euro Aus? Fernando, is that you who's asking about it? David Fernand says, good morning. Can you provide your take on the Euro dollar at 30-minute, 5-minute for the day? Sure can, David. Hey, Chris. We did, okay, cool, David. We did go over Euro dollar. You got that, he says. He says, I believe we covered it. Awesome. Chris is saying, Mike, my levels on the Kiwi dollar at 66.61. We'll go back to the Kiwi here for Chris, saying, I can't seem to duplicate your levels on this setup, but I certainly can see the appeal of calling a bounce from the area. I know this directly contradicts what I said about dollar CAD. So you're looking at 66.61. What are you looking at there? What are you looking at there as far as support? So the reason, and the major thing that I look at is for confluence regions. That's the biggest thing, guys, because trendline support in and of itself, um, when there's a confluence with a longer term moving average, an overlay indicator of some sort, whether it's a pivot, um, or a major high or low or a median line, these tend to be the regions where you get the most or the strongest reactions, right? So a basic 6764 retracement from the advance off of just last week's range coincides almost dead on with what that former upper median line parallel is sitting, and that's served as support 3 times already since we broke it. So that's the reason I'm looking at that, right? We try to keep it as simple as possible. He says there's several things. It's the top of the pitchfork for me somehow, and crosses pivots at the 1618 from the top. So here's the thing. These are the levels I'm using for this pitchfork. It's very simple. The low from September, the high from September, and the 23rd low. It's the same one that's on the daily chart. Hope that helps. I see I'm using the absolute low. I get it now. Right. Yeah. I will very rarely try not to use those real emotional spike lows and highs, especially for your slope analysis and whatnot. Remember, guys, markets don't tend to hold really sharp slopes for too long. So you're always going to want to default to the deader of the two slopes if you got a couple of slopes that you're looking at in your head. Will tend to work a little bit better in my experience. All right, so Euro dollar, Euro Aus we went over. That one is going to be of great interest for me personally. I really want to see if we hold this opening range high break. Love a rally into 59. We'll be looking at, which is the other one I wanted to cover? Oops, EuroCAD. I wrote them all down except EuroCAD. So I know that the swing trades are still on the side of this one. We'll stop at 48.20. It seems still on this one. So look, the EuroCAD, we talked about this one yesterday. It's still, right there where it could still play to the downside. For me personally, I'm a little bit more weary of an intraday position on any type of long side exposure, because yesterday, if you guys remember, we were talking about that basic trendline resistance off the highs, but also that new pitchfork that we were able to identify, right, off of the September 17th, 23rd, and 29th highs, which caught the exact low last week. We were looking for that to hold, right? So here we are with now a confluence region of the upward sloping median line off of last week's low and that upper median line parallel here now. So what the heck do we do with this? I don't know. All I know is that we're at resistance, and I would want to see short exposure against that high if I get some decent triggers, which we haven't on the intraday basis. Okay, if we plow through the highs, you're likely to see this thing jump into 48.74, which is the October open, and that confluences with the upper median line parallel. It will be a little bit more of a critical resistance for the EuroCAD. Honestly, I'd be looking back for short exposure possibly again up here. But if this breaks, look higher. So let's go ahead and clean this chart up. This was the original slope that we were working with last week. Just off the highs, you can see that broke. Didn't really give us much play on it. So we're going to go ahead and clean that up, get rid of that. The 50% retracement's also null and void at this point, so we're not going to stress that. And the rest looks pretty good. And just for argument's sake, guys, bear with me 1 second. I just want to see what this extension looks like. Oops. All right. A little bit larger of an ATR scalp, so I'm just going to highlight these levels anyway. This is the region that you'll want to clear. So if you have long exposure on the table, guys, this is where I'd start cleaning it up, taking some off the table, bringing my stops in, and seeing if you can get the follow through break into 48.74, which again is the monthly open. If you fail at this region, this will be primary region for a possible pullback as well, and that short play would still be sort of the play I would be looking for. That takes you into 48.20. It's right against where our stops are on the swing side of things. So hopefully this holds here below the median line, but if you do, you have your invalidation levels as far as the scalp is concerned, and a break above this would really shift my focus right into that 48.75 monthly open region. You'll know you're out of the woods on the short, on the long. If you're on the short, you'll know you're out of the woods and things look good for that pullback we're looking for. Essentially with a break below 47.24. So, I'm lying. Hold on 1 sec. 47.30, a little bit closer up. Remember, we don't have any conviction to actually hold that retracement because we don't know that that's a concerted high yet for the week. But you got some divergence into that high. You got a trigger break into the high. I feel pretty comfortable putting that retracement on. And if we do that, that 38.2 comes in at 47.33. And that's going to be the near-term bullish invalidation level. Does that make sense, guys, on the Euro CAD? Some relative performance there. Hopefully, again, we hold below that median line near term. And if you do see that break sub 47.33, we should be on our way as far as the objective target, which takes us into 42 on the Euro CAD. Any questions on this from the near-term prospect? Don't forget, Jamie's up later in the day at 1 p.m. Eastern, and he's going to be going through the midweek strategy webinar, which covers a lot more of the broader trends that we've been covering, the swing trades that have been coming out as of recent. So you'll definitely want to stay tuned for that later today. But from the near-term scalp approach, here's what we're looking for. The audio for me was bad today. Where can I find the recording? So David Fernandez, hey guys, is anyone else having issues with the audio today? If you are, for the recordings, guys, you can always come to the live sessions part of SB Trade Desk, and it's going to be right here, recent videos. If you want to see all the recent videos, you can always come to the live sessions video archives, and that'll give you all the recent webinars, both the midweek strategy webinars and everyday's scalp webinar or intraday strategy. They're all archived, so definitely whenever you need those, David, they're here for you, my man. Mark, Kyle, Machi, Merdad, Permendra says all the audio is good, so it might be an isolated scenario. Thanks for that, guys. David, feel free to come back and check the recordings whenever you need. They're also posted on the real-time or on the SB Squawk line, so as soon as I archive them, we'll post them right here for you. Quick reminder for those of you who are newer to the room, please remember when you sign in, guys, if you haven't done so already, if you're a new subscriber, go ahead and click the SB Squawk sign-up form. Fill out this form and request a follow through Twitter. A lot of you guys are just filling out the form or just requesting Twitter. It's got to be both for our system to pick that up. So Keep that in mind, please. All right, and that's EuroCAD. That's my checklist of trades. I want to go through your questions and see which ones we may have missed here. Dollar CAD looks good. We covered that one. Sterling dollar for Hamid. Here's what sterling dollar looks like. I was actually going to put this on the radar yesterday. I wanted to see how we were going to open today. Obviously, we do get some more UK data into the end of the week. Okay, let me just snap these lines. But wow, I probably should have put it then. Here's what we were trading yesterday. The only thing I was looking at with this is that we were putting in another very impressive Asia Pac opening range. And let me just show you on the 5-minute. I mean, this one was probably even tighter than some of the other ones that we did see last night. Here's what the sterling dollar Asia Pac opening range was. These are ideal, guys. You don't get them too often, and when you do, you really want to pay attention to them because it's like a freebie. It's like the market throwing you a lob. Sydney opens. You're holding a range between 54.47 and 54.40. You're basically talking about nearly 10 pips. All right. It held through the first couple of hours of Sydney. Tokyo, even longer. Even longer. A good 2.5-hour stretch of a 10 pip, 15 pip range. The break to the downside, short trigger against the highs, stop against the highs. You're looking for about 26 pips. You got that. Okay. The trigger for the release or the jump out of the trade would have been the break above a back 30. That would have been our sort of indication to jump out of that position. But either way, we would have closed it because trade came into support at a basic 236 off the high, but more importantly, the lower median line parallel. So as we talked about, and I hope you guys don't want to beat a dead horse, but again, these opening ranges, when they happen at major key support, major key resistance, these are the ones we want to use to our advantage. So now the weekly opening range is completely dead and set right above support, and it makes the break below 54.13 the necessary break to shift the bias back to the downside for the sterling. Okay, here's what the daily looks like. We've been butting up against this like no one's business. After a break of this median line formation, you'd expect to see that run really follow through. The fact that we're putting in all these wicks and we're unable to do it starts to suggest that we're at risk for a turnover here in the pound. As far as your topside invalidation level, that's pretty clear. It's the weekly opening range high. But more importantly, if we close above this 100-day moving average, which we failed to do for the last 5 days, that would keep the topside focus in play. By the way, this 54.89 level is that 100-day moving average, 55.48, 55.49. Or excuse me, 54.89. A little dyslexic this morning. Christopher Hudson says, I have to get better at identifying these opening ranges. It looks like easy money sometimes. I don't ever necessarily use those two words together, Chris. Easy money. It's another tool, my man, right? Like I was saying yesterday in the webinar, there's a lot of, not any one scenario will work or is a strategy in and of itself. RSI triggers, not a scenario in and of itself. Opening range, not a scenario in and of itself. Right? But when we combine them together, they become a much more powerful instrument. And that's the whole idea. We're looking for as many indications, as much evidence to support our trade idea as possible. Opening ranges has been something that's been very helpful for me over the years. RSI triggers, again, I don't want to stress them, but certainly when they're staring at you and you get divergence into a trigger break, that's even better. So use these things to your benefit, Chris, and absolutely they can definitely sometimes give you just that added trigger, that added push you need to give you the conviction to go ahead and take that position. But certainly on the Asia Pac opening range, it's been ridiculous for the last couple of for the last couple of weeks. You get these really super tight ranges. I mean, look this right here. This was just last week, right? In sterling dollar, you had a Asia opening range that only lasted about an hour here before it broke, but when it did, came right into support. There's been a lot of those really quiet session opens for Asia before a final move. So keep that in mind. Machi, great to see you, sir. Says, hi, Mike. How about dollar yen? How about dollar yen, Machi? You tell me, man. I think this thing is still going to massacre some more people. We preferred a downside break of this formation. We got the downside break of this multi-month consolidation formation, and we just came into a basic support structure, rebounded, and here we go again. How far is that? I'm not sure why that's all the way up there, but so this is a basic trendline support just off the lows that you made in late August, again tagged in October. It was the exact low that you made in late August when we had that real huge spillover on the 24th, if you guys remember. And then it was a nice confluence support on this last pullback right here, right? So now we're messing with a topside break of the formation that we broke to the downside. Honestly, Machi, I got nothing to do here, man. You know that the FOMC interest rate decision is on tap for next week, guys. It's not going to be a presser conference, so we're not going to get all the updated projections or anything like that. But I think getting a little bit more Fed rhetoric out of the way, clearance, is going to give this thing the directional bias. I really don't know what to do here. I'm be completely frank with you. And that's okay, guys. We're not going to have full clarity in a trade idea on every pair. But I think specifically dollar yen, I mean, I still like the short side. Do I have a trade or a position to trade against? No. Even if you look at this on a 30-minute, it's a mess. At its face value, it looked like yesterday was a break of the weekly opening range high. So I guess you're working with a near-term upside bias, but you've been getting divergence all along those highs. So honestly, I don't know what to do with this, Machi. I think it's going back to the abomination status for me. So I'm going to kind of just wait for see if we get some clarity. Add to that, Machi, that the biggest thing, man, is that this thing is the ATR continues to contract. So now you're looking at 18 pips on a daily basis. When we contract into that type of range, it makes it much more difficult for near-term traders like me to get involved. If you're trying to position for a larger scale dollar yen move, again, I don't have conviction on that right now, but if you are, that's a different ball game from an intraday strategy or even an intra-week right now on dollar yen. Yeah, the conviction is just not there. Conviction is just not there. So we'll look to see broader dollar performance. It seems to be tracking the index rather nicely, especially on this reversal and rebound off last week's low. So if we're looking at just relative performance, as we were talking about the index earlier, sure, we could probably get some more upside in dollar index, i.e., could probably get a kick higher here in dollar yen. Would I want to be involved? Not really. Not really. Machi, did that make sense, man? I wish I had a little bit more conviction for you on this one. Christopher says, what a hideous pair to trade most of the time. Chop City. Yeah. You know, dollar yen, Chris, is great when you get the broader directional trades, right? When you get the drop-offs, break of the monthly opening range in August was, you know, a free-for-all. Even a break of the initial May opening range was a very, very nice rally. But when you get into these types of consolidation, yeah, not interested. Not interested. You know, even a pair like Kiwi yen. And the thing is, guys, if you want to trade a yen pair, you know, we can get a. I'm also confused. So the question, hey Machi, give me a little bit more color on that. But Kiwi yen is something that I've been looking at. I think Jamie was, we were having a discussion on this one yesterday as well, of possible short exposure here as well. You came into a median line dating back to the highs that we made earlier this year. That's being held very nicely. Momentum is failing at 60. On the lookout for me. Haven't taken anything yet, but another yen pair, if you do want to play, might be something that we can get involved in. Even Aussie yen, which is something that we were following last week, much closer, coming into support structure here. A downside break keeps the shorts in play. That being said, you're at a support structure. So for the Aussie yen, here's what it looks like on the 30-minute. And if we break this median line to the downside, we'd be looking for that run right back into 86, and that would be the near-term bullish invalidation level for Aussie yen. So there's a couple of different things that we can work with here. Machi says, I agree. Oh, he says, I agree with your explanation on the dollar yen. Thanks, Mike. Hey, my pleasure, Machi. Again, I wish I had a little bit more conviction for you on that one, but the yen crosses are tricky here. The yen crosses are tricky. Hamid says, can you please talk a little bit more about momentum divergence? Thanks. So, Hamid, specifically, all you're looking for in divergence is that you're not high in price is not being reflected in the oscillator. Okay, so the way I like to say it is that momentum divergence is simply showing you that an extreme is not showing, okay, an extreme in price, or is not reflecting an extreme in price. So what I mean by that, Hamid, is right here. Here's a primary example on a daily chart of the Kiwi dollar. Price action from this low that we made in July made a new low, right? The oscillator made a higher low. That's divergence. The most important thing to understand about divergence, and probably the biggest misconception, is that it's only based on the close price. The wicks don't matter. So when you're looking to identify divergence, do yourself a favor. Just bring it into a line chart. And you can see that much clearly. Here's a low. Here's a much lower low. And here's a higher low. Now, this is an extreme example over the course of months, right? But you also get these types of things intraday. Not the best example. Let me see if I can find one of these for you that'll make this a little bit clearer for you. There was a beautiful one yesterday on that scalp that we took. Here we go. So here's a Euro Aussie 5-minute chart on the rally right ahead of this trigger break. We talked about this yesterday, right? Price action, higher high, higher high. The oscillator holding highs. Even if the oscillator doesn't make a lower high but holds equidistant highs, that's still divergence. Why, Hamid? Because the oscillator didn't reflect a new extreme in price. And again, brings into a line chart, you can see clearly higher highs, no higher highs in momentum. So when you get these divergence into a trigger break, meaning a support trigger just as you would in price, these typically are really nice triggers for scalps or intraday trades, because you got waning momentum into a trigger break, and that'll shift the bias right to the downside. Hamid, does that help? So this is on all time frames, my man. We want to look at this. We can notice intraday divergence. We can have divergence on the 30-minute. We can have divergence on the weekly. We can have divergence on the monthly. Okay. The one caveat I want to put out there for everyone in the room is, remember, divergence can last. It doesn't designate time. Divergence can go for a couple of hours to a couple of days before it breaks. So when we look for a divergence, that's why we want to see it follow up with a trigger break, an opening range break. We don't want to take trades solely based on divergence. Okay, I'm over on time. I got to wrap things up. I hope that small discussion gave you guys a little bit of help there. We'll be back on tomorrow at 8:30 Eastern for another intraday strategy webinar on SB here. Remember, later today, 1 p.m., Jamie Setley, my man, is going to be up with his midweek strategy webinar, so make sure that you stay tuned for that. What is the Twitter handle to join SB Squawk? Moman, it's SB Squawk, actually. and it's at SB Squawk. So here's the link. Here's the link for the instructions on how to sign up for that, just in case for everyone in the room. If you're not already on the SB Squawk Twitter handle, just follow that link and it's going to walk you through the steps needed to get you signed up for that. All right, guys, again, have a great trading day. We'll see you later today with the midweek strategy webinar, and again tomorrow morning back with the intraday. Cheers.